Now, Nigeria's net foreign exchange reserve as of the end of 2024 stood at $23.11 billion, the highest level in over 3 years, reflecting a substantial improvement in the country's external liquidity, reduced short-term obligations, and renewed investor confidence. According to a statement by the Central Bank of Nigeria, the increase marked an increase from $3.99 billion at the year-end of 2023, $8.19 billion in 2022, and $14.59 billion in 2021. Reacting to this development, Economist Mukhtar Mohammed emphasized the need to boost diaspora interest to sustain economic growth. He also highlighted the importance of the CBN addressing the retail sector's foreign exchange shortage for a greater economic resilience.
I think it has to do with the current, will I say, policy in terms of looking at FX as a means of driving in imports into the Nigerian economy. I think they make sure that most of the people that have FX are genuine people that need to import goods into the country. They've reduced sharp practices in the FX space. For me, that is one of the major policy drive that have resulted in this sharp increment in the short term. For me, I think that is one of the best policy they do, trying to make sure that all the sharp practices, especially from banks and civil servants, were reduced to the barest minimum, especially in the FX market. I think one of the major is the two-way exchange system, inflow and outflow. We have seen that for the first time we are having inflow, and we are not having people complaining that they could not repatriate their money back to their country. I think for me that was one that have really been able to boost confidence in people. That policy of a two-way exchange system, that for me is what has really brought more confidence to the economy. And if you look at the data from the Nigerian Stock Exchange, you see that a lot of outflow from foreign investors out of this country, and none of them is complaining that their money has been trapped here in Nigeria. So for me, I think that is one area that they have really worked very hard and brought those confidence in this in the FX market. Now, will we be able to sustain that? I have my doubts, because again, that is largely going to be driven by availability in terms of output of crude oil sale. How much of this crude oil sales are we able to sell in the international market to earn more FX into our foreign reserve? And you know the challenges that we are having in the Niger Delta in sense of even meeting a budget target of 2.06 million barrels per day.